the S&P 500, the Nasdaq 100. Before we get into the technicals, we need to talk about what's being said right now regarding rate cuts, what's regarding the debt ceiling, regarding the big moving factors. Because if you look at technicals, everyone's saying, look, the S&P, the Dow, we got to keep going down. We got to get crushed. New lows are coming. But for some reason here on the channel, we've stuck with a narrative that we have to be bullish while the Nasdaq remains at these levels, which we'll talk about here in a second. We've also been hammering home the narrative that a pause is most likely coming. Now, these are the bullet points today from Fed Bostic. We've got to get inflation under control. Number one, not so good. Number two, I don't think we're going to cut rates this year, is what he's talking about. Number two. And then number three, I expect inflation to be in the highs of threes by the year end. And then the kicker, number four, the old Statue of Liberty Boise State edition versus Oklahoma. I know you remember it. Fed Bostic, if we were voting now for June, I would vote to hold, talking about rates. Now, this leads us to a lot of questions. The market definitely liked what happened here. We're going to talk about the ES, the Nasdaq, and everything in between. Before we get into that, the debt ceiling. Again, I'm giving you all the juice today. We're not giving you no ads, right? Biden's optimistic about the debt limit deal. Now, again, I think the debt ceiling is like the only thing on the table right now that is just totally up for grabs. Anything can happen, right? McCarthy says the White House isn't being serious, and right now the tone is that they're not going to get a debt deal resolved by tomorrow. It's very unlikely. Okay, that's what I'm grabbing from all this information. Interpret it as you will. It'll be on Twitter if you're interested. Now, before we get into that, I have to ask you to consider doing two things, liking and subscribing, but to also let you know right now, the podcast is officially launched on our secondary channel here, Ops and Drops Extra. That's going to have our podcast and all of our short form content. So make sure you go check it out. There will be a link somewhere down below. But this is going to be basically going over fundamentals, more in detail stuff I can't cover here on this channel. Also, if you are interested, the Discord link is down below. There are spots now available. Make sure you tap in if you're interested. This is not a signal service. This is an education service where people are like-minded in the sense of day trading every single day, looking at the market, looking at different stock plays and everything in between, right? Yes, we talk about what stocks we like. We talk about which options we like. But more importantly, it's not to just follow blindly. It's to teach you how to fish. That's the goal. Teach you to become self-sufficient. Now, as we get in here, let's talk about where we're at. Okay, let's talk about it. First of all, the Nasdaq, right? Everyone wants to talk about the Nasdaq. Okay, for some reason, we look at this Nasdaq, and this is the daily chart. It's a clear ascending triangle that you are breaking out above. And what have I said? As long as you remain above May highs, these are May 1st highs to start the month, I believe you're bullish, especially if you remain above April highs. Okay. Now, what everyone's pointing the finger to is ES. And I'm gonna paint a picture here and show you what's happening to give you a visual. Okay, so ES, if we zoom out, what's happening? Really not much. You're consolidating at highs, consolidating from February highs. You're doing nothing, right? You break above 4,200, we think we get continuation to 43 really easily. But until then, we're just range bound in between like 4,120 or really 4,100 to 4,180. That's it. Okay, and everyone say, well, the market's not doing nothing. Now, I beg to differ when we look at that side of the coin, right? We look here, and when we look at what's really moving, I would say, again, the Nasdaq is traditionally what we watch, okay? And when I say that, I mean, if you're looking at, if I were to look at the stock market and bring up a heat map, you would really be most interested in the tech names, okay? Apple, Microsoft, Amazon, Nvidia, Google. I mean, the list can go on. Okay, those would be the meta. Those would be the names you're interested in, and those names keep performing. They can remain, sitting at highs. They remain pushing the boundary, pushing for breakouts. And if we look at the Nasdaq, it resembles that. It's breaking out. It's breaking above, holding, and pushing back up again today. So I would argue today's candle close is again extremely bullish. Like I told you on Friday as well. We said, look, if you hold above this, you remain strong. It's just to retest it and you're bouncing right back up. Now, again, what I want to say here is, yeah, we look at something like SPY and you're just range bound. Nothing's really happened here. Now, SPY, I will say you're very close to potentially getting that breakout opportunity. So far here on the daily, you continue to print decent candles. You try to push down, sellers try to attack you. They tried again today, but what happened, right? You move down with piss poor volume and buyers just step right back in. We look at the volume today, and just to let you know, the first 2 hours of trading, you were sitting at roughly, I believe, 9 million volume in the first hour and 30 minutes. It was between 9 and 13 million. Nothing. We go live, you bounce back, and we're live here every day on the channel at 10:30 a.m. Central, going over charts and stocks that you guys want us to cover, and then you bounce back a little bit. But I'm still going to tell you, your volume here is piss poor on SPY. Right, 53 million, terrible, nothing to be excited about. Looking at Qs, tech specifically, it's nothing great. It isn't fantastic. It's nothing along those lines. But again, it's closer to its 30-day average than SPY is. I will say that. Now, also, it's important to realize before you start hammering me, saying volume, where do you need volume? Like, where do you traditionally see volume ramp into the market? Do you see volume of buyers just taking you up and up and up on the Nasdaq? Well, again, we've covered this before as well. Again, just bringing up volume on the daily here. What happened back in our bullish market of 2021? You come and you look at this volume down here, and I would say you kind of decline from May 17th into essentially June 18th. You're declining in volume, pushing up, right? And then again, you spike here in July as you reverse, and then you decline into August and you continue climbing. And then you spike again because you reverse down, and then buyers step back in and push you back up. And then guess what? You continue to go and go and go, right? That's just what happens. And actually you increase in selling back here in September through October. And then again, volume decreases, as you can see here, from October into basically November. Very low volume on the Nasdaq, but the Nasdaq climbs again. Now, what is my point here? You traditionally are going to get a majority of your volume when you reverse. So we start to see pivots in the market, right? Giving you an example right here. February of this past year, 2022, your most volume spikes in here, 1, 2, your highest volume you saw for months. Guess what? You get a little bit of a pivot, you come back down, volume declines again, you kind of flatline here, and then you get a little bit more to the upside, right? Now, again, you're going to see more volatility on the downside where it's more sporadic. But again, as you see here, coming back into May of this past year, volume starts to ramp up at lows and then declines as you push back up, right? So you don't necessarily have to have crazy volume to spike back up or to spike necessarily to the downside. Now, if you are reversing or changing course, again, pivoting from lows, as you can see, then you traditionally will see it. Now, what I will say is your volume on buying has been pretty incredible on the daily time frame, essentially since December or the end of December. Your volume has been really solid. If you compare this going back to 2021, there's not even a comparison. It's far more volume coming in than you had back here. So again, for everyone saying volume, I agree. But what you should be seeing is very aggressive selling if you were in fact bearish or looking for a reversal. I think this is even easier to see on the ES and the S&P 500 because the most volume that you've had over the past almost 2 years came when? At your local lows back in September through almost October, November. That was the most volume that you've had on SPY, was at your lows, okay? And that was buying and selling volume, kicking in both ways. And then again, where was the next spike of where we saw our most volume? Was during the bank collapse, the bank crash, the bank crisis we just had. That was, again, the most volume that you saw, and then we kind of declined from there, slowly moving back up. Okay, so that's what we're looking at. That's what we're viewing. I just want to paint that picture so you understand. If you have questions, I would love to answer them down below, so make sure you ask them. But that's my viewpoint there. And that's not necessarily, I'm not saying that low volume is bullish, low volume is bearish. That's not what I'm saying. I'm saying that when you're continuing and moving in a trend, you don't need to have breakout volume. When do you need to have breakout volume? When you're reversing or breaking out of a trend. The end. It's called breakout volume for that reason. So that's what you're preparing for. That's what you're watching. And that's really the main thesis of looking at volume, to give you and to paint a picture of who's getting in or who's getting out of the market. Now, we look at Nasdaq, look in here. I will say, you have been moving a little bit slower in this range. Even as you've been breaking out, you've been holding great above, 1337, 1335. You're holding fantastic. You want to start seeing a little bit of pick me up, right? You want to see that. And I believe we saw a little bit of that buying kick in today, a little bit, when Bostic said what he said, Okay, I in my opinion, you started to see that. Now, the red flag for this week right now for me is going to be the dead ceiling and seeing what happens there. That could cause some volatility to the downside. But until we get back below 13.35 on Nasdaq, I remain with the thesis of upside is probably here to stay short term. Going into SPY, giving you a picture here because I know you're going to have questions. You just continue to make higher lows so far. I'm not really giving you a strong opinion on SPY because I'm not going to lie, I don't love it. It's not my favorite. I think if I was going to go short on anything, I would rather short the SPY than short the Nasdaq. It makes more sense because its equities are having more issues as far as banks and oil, industrials, things along those lines. Those are having more trouble and they're struggling in comparison to tech and semiconductors and those names. Those are doing really well. So something to think about. You're kind of having this little bit of a pennant. You want to push out, but again, I'm not the aggressor here. I'm not going to be aggressive into a resistance. That makes no sense. Okay. So stay with me there. Now, the next thing I want to talk about is a little bit and really quick. We'll go into some stocks I'm liking is going to be VIX and where you're at here. Now, again, some people commented about VIX and what I said here. It's tough, and I really shouldn't even have this wedge here because, again, I want to highlight, and me and Jay talk about this often, wedges are probably one of the most inconsistent patterns to have on your chart. I'm going to tell you right now because you tend to redraw them. You might break down like, okay, well, let me adjust my wedge. When you're looking at like a flag, you're looking at ascending triangle, your goal should, and you're doing technical analysis in general, your goal should not be to confirm your theory. Your goal should be to have your theory, have your thesis, but then to disprove that thesis. Because if you can disprove it, then it probably means that it wasn't the best thesis in the first place, right? So if I'm bullish on Google, I want to look for reasons maybe to say, well, how could I be wrong? How could I be wrong on the thesis that Google is in fact bullish to possibly save myself money? And that's kind of how I go about trading. Now we look at VIX. I also want to highlight here. We go to something like the weekly to paint you a picture here. Where did VIX trend in 2021? And again, I think we are ignoring some of the warning signs in front of us. Okay. VIX trended at lows of $17 to $14, between 17, even 16 to $14. Now, what happened during that time? Okay. And specifically back in November and October, I want to use that as an example. Yeah, you saw a spike on VIX, but I want to use this as an example because when we look at what happened with indexes during that time is they went absolutely bonkers. They went absolutely crazy. That's just the reality of what happened. You went from 14.6 all the way to 16.6. I'm not going to say you're going to have a 2,000 point push here, but I'm just saying when VIX is low, the market tends to do well. Just saying. It is what it is. Now, I will say there's a bit of a discrepancy in VIX these days in comparison to then because now we have one-day contracts, the SPY contracts, so derivatives move a little bit differently, but understand that. Next up is the dollar. A lot of conversation, a lot of talks around the dollar, a lot of questions about the dollar. Again, I still think the dollar has a lot of cause for concern, but a few things that we need to be looking at. Our yields are hurting. Yields are hurting. It's just a fact of the matter. Okay, we're going to talk about that a little bit more. But also, you're at a major support. I still think the dollar has room for downside. I still think devaluing will happen. I think that oil specifically, though, is getting hit in commodities. So I think that's just propelling and pushing up the dollar right now. People getting out of commodities, transferring back to the dollar, and the just overall the cycle of money that happens there. Okay, because we look at something like oil here, and it's going to paint a picture and show you again that you continue to press down. You hit the 200 SMA, and you're sitting at the bottom of this range. In the podcast, me and Cajun talk that oil typically moves in channels, right? You don't want oil to be volatile. You don't want it to move up and down, up and down. You don't want that to happen. If we look back at past cases, you tend to move in a 6 month cycle, just over and over and over. And you may get some volatility, but if we go back before COVID, it was very consistent, moving sideways, pinching, and overall just consolidating in specific areas. Okay, understand that just the way it is. It's healthy for the markets as well. It's healthy for inflation as well. And so right now you're kind of just trending at lows, and it may even go deeper based on where you're at. And this doesn't look ideal in the short term right now. Gonna say that. Now, next up, also people have been asking a lot about gold. Again, I'm trying to cover it as much as possible. Gold, you're sitting at highs. I wouldn't be going long. You never want to long the top, my opinion. Triple top, from basically 2020, 2022, and then, right now. If you break above, then I see highs coming back in, maybe 2,200, but I just don't see that right now. There's no point. The final thing I want to talk about is the yield inversion, what's happening here. I posted this as well last night. We also saw from Goldman Sachs, they reported that the yield inversion is heavily being shorted. Okay. People are expecting the yields to regulate soon, especially with the idea of a pause. Okay. Don't shoot the messenger. Again, I am just the messenger. If we look here, you continue to see the 10-year climbing down while the 30-year climbs back up. You want to see the 30-year be more valuable than these shorter term yields. It indicates a healthier market. Again, don't shoot the messenger, just telling you. Do you want to see the 2-year yield get back below 4%? But again, you are right there. These are things to be watching, things to be looking for, just things on the table. Now, let's go over some of my favorite things. Now, right now, again, SPY, I still think you look solid. You want to break out, but again, wouldn't be playing that. We mentioned AMD. This was troubling. This was a struggle for myself. Absolutely disgusting, but I have to be transparent with you guys. I ended up getting stopped out of my position. It was like a $300 position. I showed everyone on live. Again, if you want to get in live, I recommend it just so I can go over things and kind of like, it's also just really helpful to teach guys in live. I did not have this level marked out. Straight bonehead. I was just zoomed in. Again, I was telling Discord. Yes, even I miss things. Even I make mistakes. And I got to be transparent about it. So I had mine marked out right here. If we made a new local low, I got stopped out right there. And then you bought right back up. It was absolutely great. I should have just doubled down on the position. It is what it is. Tough. A lot of guys in Discord ended up making money. Just to give you a visual of, I mentioned how we called that out and what we were looking for there. Again, you can see these guys over here, 20% here on his contracts. They went from like 7, actually went from like 6 something to 820. And you saw a few others, absolutely print here, over 100% there. You went a little bit shorter dated. But yeah, so those still did really well. Now, I want to mention a few plays that I'm liking. Okay. And today is going to be different, right? Number one, big play that we're liking. I mentioned this one on live, mentioned in Discord. I just didn't get into it because I was kind of like hoping and praying to get a pullback. If you look at the weekly here on LRCX, it's a semiconductor name. They basically manufacture the parts that are used to manufacture the semiconductors. You have about like an inverse head and shoulders here. Absolutely gorgeous. Is like the closest thing you can get to NVIDIA that they had there. I'd be targeting here locally around 620 and then possibly up to highs. I definitely think you have a $70 range push to LRCX is totally possible. Keep it on your radar. It looks extremely strong. Love it. Now for some other names. Baba. I'm going to tell you right now, big fan. I love what's happening here. I typically hate China. Everyone knows I hate China. And not the people. I love the Chinese people. But what I don't like is the Chinese government, especially when it comes to stocks, because it's dangerous. It's very volatile. You don't know what to expect. Okay. But China came out with their GDP, their growth expectations, and they look primo. We look at what happened with Goldman Sachs as well. They upgraded the ratings of the Japanese economy and what they're going to be doing overall. They expect a lot of growth out of there. So what do we like? Alibaba. Now, again, don't take my word for it. Okay. Don't take my word for it, but I love them. I absolutely love them. If you mount the 200 SMA around 89.6, I believe you have a lot of upside room, but you do have earnings this week. So watch out, be careful, do what you will, but I love them. I'm not unsure. I love him. Also, too, Michael Burry, you can actually go check this out, Google it online. He has allocated into Scion Capital. I believe he has like about 19 to 20% of his entire portfolio, which is definitely overextended, but it's in Chinese equities. And his position in Alibaba is up to like 10%, which is crazy, but he likes him a lot and he got a lot of JD. So keep him on your radar. Next up, ATVI. Activision just reported their news today that they basically, in Europe, there was a big dispute if they were going to get past there and going to be able to get acquired by Microsoft for $90 a share. That got approved today from Europe. I am a fan of Activision here. I'd be playing, if I'm looking at Activision, I'm going deep in the money. Not even too deep. I'd be going like 70, 75s, but I'd be going dated for like at least January. They're about $10, but back at highs over here, they were about 10. They were over 16, I believe, and they're being acquired for 92 a share. I like it personally. So yeah, do what you will. So again, like 70s makes sense. And even at like $16, I mean, you're not even at 92 yet. So it makes sense logically, like the play there. Again, do what you will with that information also. And then also, I think, and this is going to get a little bit, I'm trying to be careful before I say some of these because I don't want people to start YOLOing or getting crazy. But yeah, I don't really, people are going to do what they want to do either way. We look at something like CRM. Okay. So CRM, looking here at like the daily time frame. Okay. Yeah. Just wanted to make sure because I had it drawn out over there. We're going to go over here to the daily real quick. You can see clearly you had an ascending triangle playing out here. Then you clearly broke over that level. And you can just, I mean, it's very, very clear to see. You can even draw it from here if you want, from lower levels to get it, even better, higher low that was kind of forming out there. You obviously broke above that. You got the back test at 200. I think you have room up to 217, 220 personally, and you do have a gap fill locally at around 208, 209. So I do like them. But you're seeing names in the cloud sector overall look very, very, very strong. CrowdStrike, I love it. Looks so good. Fantastic. Snow, also love it. Very cheap. Down from 400 at 172. Love it. Datadog. It's already ripping though, so I'd be careful. But again, still ripping, going crazy. You're seeing very similar things in this entire sector, right? So this is what I'm saying. The Nasdaq and tech have a lot of room. That's why they have my focus. I'm not focusing on Caterpillar or, oil stocks or bank stocks. If I want to go long term, then yeah, bank stocks make sense in the long sense. But right now, from a trader perspective, swings, scalps, things all tech has all my attention. That's what my focus is there. I'm totally aware as well that things could shift with any type of bad data. So I have to be able to pivot, get away, not be, emotionally connected to these positions or anything along those lines as well. That's my opinion. If you have questions, comment down below. I'll see you tomorrow. Have a good one.